Welcome to this week's halftime talk, where we're honored to be joined by Mr. Mele Kyari, who is the Group Managing Director of the Nigerian National Petroleum Corporation and also the National Representative of Nigeria on the OPEC delegation. Mr. Kyari, thank you very much for joining us on halftime talk this week.
Thank you very much, Sin. It's good to talk to you today and to the team.
Pleasure.
Thank you very much. Pleasure.
Given that we have just come out of a very important OPEC period over the weekend, I'd welcome your thoughts on the decision that OPEC Plus made in order to extend the deeper cuts through another month into July, and what is the perspective of Nigeria on that decision?
Thank you very much. It's very obvious that the market has not achieved balancing. Is not likely to do so before the end of the year, and not very soon, even in 2021. And everybody's forecast indicates that we could still be at oversupply of up to 7 million barrels, even by the end of the year. That means that this market will not rebalance until we do some certain things to make sure that we pull down the production, and the supply naturally comes down with that. And it's very understandable, the OPEC Plus agreement to extend the court agreed during the last month, and to make sure that at the end of the year, we can bring that number of the oversupply from the forecast of 7 to 9 million barrels to something lower than that, so that prices can rebalance. The temporary shift in the prices that we have seen recently in the last couple of days, or last 10 days, to be specific, is indicative of some response to the court and some response to the increased demand that we have seen in the market. But that everybody also agrees that it's not sustainable as long as the production levels remain at pre-COVID, and that the cuts are not implemented. And so you'll expect that this supply will overshoot the demand in the short term, and then we'll probably slide back to the prices that we saw in early March. So everybody's getting against them. Yes.
I was just going to ask you, the oil prices have recovered quite dramatically in the last 2 months, 6 weeks certainly. Is there a danger that they've climbed too fast, too high, that will attract some of that more higher cost production back to the market?
My thoughts are that it is actually driven more by sentiments than by demand, because we haven't seen that significant rise in the demand. And of course, even the courts, as you are aware, there are many failures in achieving the 100% conformity with the courts, which means the volumes that are supposed to get out of that market are still there. And therefore, the price rise that we saw, that significant jump, it appears very, very cosmetic to me. And I see that if we don't contain the supply, we could still start back to the early March price level.
On that point, obviously Nigeria was identified as one of the countries that had not yet met its commitment or obligation under the OPEC Plus agreement, and would be expected to do more cuts in the July-August period. What's your views on that? And is Nigeria able to make such deep cuts in July and August?
Yes, first of all, it is true that we have not achieved 100% conformity by the end of May, but I'm convinced that by the end of June, we will reach full conformity. The reasons are very different. Managing reservoirs in Nigeria is very different from other jurisdictions, and you have to have a plan around the wells themselves, so that we have very aged wells, and if you pull them down at the same time in a very dramatic manner, you may not be able to recover them. So if we look at last 10 days of data, for instance, which is available, you will see that we are actually below conformity level. We have gone beyond conformity to a level that we're also still trying to manage that. It was a gradual process to cut down production by well and by reservoir level. And I know that the current numbers we are seeing today will take us to full conformity by the end of June. So the concern is appropriate, but obviously it didn't see the realities around our production system. Of course, we are fully committed to making sure that we comply with those cuts. I will see no problem. Actually, by the end of June, we may have rebalanced to a level that may exceed the expectations.
And there is an expectation in the announcement from OPEC Plus over the weekend that because you and a few other countries didn't meet 100% in May and June, you will have to make up for that in July and August. I'm wondering how much more of a cut will you need to do in order to make up for May and June?
If you notice the numbers, our oversupply was a little less than 100,000 barrels against the agreed numbers. So that's really not significant, and you do not really need an August and September to balance for that. And the cost that we are doing today, the shutdowns that we are experiencing today will ensure that latest by mid of July would have come to full conformity. And I think we can actually achieve that conformity even by the end of June.
Now, in the bigger picture of Nigeria over the recent decade, or certainly recent years, the rise in shale oil production and the quality of the sweet oil coming out of the US has competed quite directly with Nigerian and other West African oils in that market, and has pushed Nigeria a lot towards Asia. I'm wondering, with the sort of decline in shale oil production in the US, does that create an opportunity for Nigeria to build some market share in the US?
It's a very flexible market situation, as you may be aware. The spread between WTI and the Brent has never closed. We have never seen this close spread, less than $1 between WTI and the Brent, which technically means is that there will be no incentive to move crude from the US even into Europe, because we can get the cheaper crude because of the balancing that will be created by freight. You're sure that the market, even the European market, still remain available to Nigerian grades and similar grades around the West Africa. Looking at the markets beyond the COVID situation, you will see that the Nigerian grades are strategically placed in such a way that in a market that is looking for gasoline-rich grades, as you are aware, the challenges that others will face will not come to Nigeria. We are still seeing very significant appetite for Nigerian crude. We do not have significant cargo overhang in the market today, much less than any other type of grade that is in the market. And obviously, until the shale oil production comes back to full production, you will not see movement from the US into Europe for a while to come. And as we're also aware, because of the pickup in the consumption in the United States, even when you produce, the producer will be very wary of this. We will not see that quick recovery even in the United States. And therefore, overall, what I see coming is a great opportunity for Nigerian grades. It will be the grade of choice, because all the consumption rises that we are seeing today are coming from gasoline-rich crude oil. And of course, there will actually be a competition for Nigerian type of grades. So we have no fears. The whole world is our market today.
And on that point, when you look at recovery post-COVID, do you expect that the demand centers that we were previously there, that before COVID, China, India, the Middle East, will reemerge as the fastest growing demand centers now, moving out of COVID?
I think this will play out. The demand center will certainly still remain China and India and the Far East for very many reasons. One, this is where you're having significant industrial growth. Every forecast about GDP growth, is tilted towards that region. And therefore, naturally, you'll see more demand in those locations. And of course, also because of environment issues, business environment issues, Europe and the US will surely slowly respond to this, much slower than any other region of the world. So by natural situation, we know that growth in Europe will be much lower, and that of the United States, and therefore demand will also be lower. So everybody will focus on growth in the Far East, particularly China, and of course in the Near East, in India. So you're right. We think that the markets that are known to be the growth area will certainly remain to be so in the short term.
Have you been surprised by the China demand has remained quite strong through the first few months of the first half of the year now? It really wasn't interrupted by COVID. The imports reaching record levels in the second quarter.
I think they did not panic like others did, because the lockdown that we saw across the world didn't get to that extreme limit in China. And therefore, the impact on consumption was much lower than any other country that we know. And also their reaction was much quicker, and they were able to come back to full opportunity deployment in a very short period of time. So that is why the reaction in China has actually not affected the demand. And that's why you just saw that quick comeback in China.
It's been quite impressive. Just looking a little bit closer to home, Mr. Kyari, in terms of Nigeria's oil industry in the first half of this year, 2020, I suppose like everybody else had a big shock from so many different things. How has it held up operationally? Obviously in other places, COVID has impacted, literally infected operators in the field, etc. I'm just wondering, how has the industry in Nigeria held up in the first half of the year?
I think what we did, we are better prepared than most industries across the globe in the Nigerian oil and gas sector. We saw the challenges coming. We engaged our partners across the businesses to establish very clear business continuity plans, such that our terminals keep operating, our rigs don't come down, our pipelines are operating, and literally, except for the OPEC intervention, OPEC plus intervention, would actually saw increase in production, which is indicative of probably greater efficiency during the COVID period, because you have less interruptions, you have less interruptions even at work, and also a number of resort to technology, which ensure that people work more efficiently and is some very marginal or very significant increase in our production number in some days outside the COVID period. So for us as an industry, the only thing we lost is price. Otherwise, in terms of efficiency, in terms of getting things done quickly and efficiently, I think COVID has actually become a very, very good thing for us.
One of the things when we talked together in Fujairah in September last year, it was soon after you were appointed as the head of the Nigerian National Oil Company. You were focused on building up Nigeria's capability to produce more products and refine more products. I'm wondering, how has that intention and vision progressing now, nearly 1 year into your post?
Yes, a number of things are going on to bring into realization. As you're aware, Nigeria is the largest consumer of finished products, gasoline, fuel oil, and everything that you can think of in the world. We're actually the market in West Africa. 70% of gasoline consumption in West Africa is actually done in Nigeria. Therefore, it's the largest market available because of the size of our economy, our population, and many other factors that play out. So for us, it's an opportunity to ensure that we become the supplier for the West African. And you can't do that except you're able to refine. And you cannot refine except refineries are in place. A number of interventions are going on. One is the one that everybody knows is the Dangote refinery, 650,000 barrels per day refinery, which will come on stream, possibly by the end of 2021 or maybe early 2022. If that happens, it will be a game changer for the whole region, because the overall production will be far higher than the consumption that Nigeria will require in current circumstances.
So that you said was 250,000 barrels a day?
650.
650?
650.
Wow, big.
Barrels per day. And then we have a combination of 4 refineries with total capacity of 445,000 barrels per day. All of them are on shutdown today for very, very clear reason, and it's a very informed decision. We shut them down so that we can get them fixed properly. We're rehabilitating them. We're getting the best of class to make sure that they work. And our plan is to make sure that this come on stream latest by the end of 2022 or probably early 2023. Once that is done, you have a combination of a 445,000 barrels per day refinery capacity owned by the National Oil Company. You also have a 650 owned by the Dangote Group. And a third level of intervention we're doing is to create some splitter units, these condensate refineries. Total capacity plan of about 200,000 barrels per day, and that will also can come on stream, by 2022. Because as you are aware, putting up a splitter plant is much quicker, much easier, much cheaper. It also gives you all the white products that you need as quickly as is possible. So when we have a combination of a 200,000 barrels per day condensate refinery, 445 of our own capacity put back on place, and you have the 650,000 barrels per day Dangote all in place within 3 years, what you will see will be a monumental shift in the demand and supply direction. Actually, we are seeing a possibility of a reverse flow into Europe because many of the refineries in Europe, as you are aware, are being shut down permanently. And therefore, there are heavy requirements to provide white products even to Europe in the short term to come. And of course, the African market become the market for Nigeria. This is our target. This is realizable. And every step is being taken to make sure that we put this on the table. So you're right, we have plans. These plans will work.
And if you succeed with that, and I've no doubt it seems you're well on the pathway to doing so, would you then reconsider your position within OPEC? I mean, you would nearly become, no longer a significant exporter of crude oil when you are would be a major producer of products. How would you see your relationship with OPEC at that time?
OPEC is very flexible when it comes to countries' determination to become exporter of petroleum product or crude oil. It's very clear that nobody said because you are in OPEC, you remain in where you are for the next 20 years. That's not the perception in OPEC. That's not the plan. That's not the persuasion. OPEC recognizes countries' right to grow their production, to grow capacity, and to become economically independent. That is very clear, and we have very deep conversation with OPEC. They recognize the efforts that we are making, and creating a balance of supply and demand is in the best interest of the world. And I do not see OPEC Plus or OPEC becoming a hindrance to this. We see no challenge with that.
If you consider the financing aspect of what's required for those major projects and for any capital investment into oil production and oil processing is so large, and yet the appetite from the typical sources of finance is shrinking due to both economic reasons, but also due to climate and other sensitivities. How do you envisage the availability of capital to meet your goals?
I can share with you, when we tried to look for private finance to fix one of our refineries, actually it was oversubscribed, surprisingly. And as we are trying to see private sector investment in making sure that we don't finance this refinery from our cash flow, we have significant interest indicated by very serious financing institutions. It may be a global challenge, but for us, we don't see that local difficulty because we see appetite, we see many banks talking to us. And for the reason is very clear and understandable. When you produce gasoline here, you have a market for it. You have a 52 million to 60 million liters of PMS consumption per day. And it's a country on a growth line. Everybody knows that Nigeria's growth projection, 3 to 4%, is nowhere near the reality because we have a lot of informal economy that is not documented. And the combination of that is that you will see growth in the excess of 6% in our country. And with that growth projectile, businesses will see that when you produce gasoline here, it will be sold. And when it is sold, the loans will be paid back. So if you have capacity, for instance, our 4 refineries can only make 80 million liters of gasoline, and the 200,000 barrels per day condensate refinery will also not make all of it. It will not be gasoline, probably 10 million liters of gasoline. So you still need the Dangote refinery to come in place to meet the national demand. So everybody knows that because of the advantage of location of our own of our refineries, that's the state-owned refineries, the pipeline networks that we have will make sure that our production will not go to international market, and there will be a local market for it. And once there's a market for it, they know that the loans can be paid back. That is why we are seeing the appetite for our financing needs.
And just coming to sort of final thoughts, Mr. Kyari, I'm wondering what your thoughts are about coming out of this very tumultuous period for the world and for the energy markets. We saw that most dramatically WTI declined into minus $40 a barrel price. I'm just wondering your thoughts on the legacy of this period and how it might change the industry. We saw announced yesterday BP cutting 15% of its staff, and we're increasingly, even pre-COVID, seeing the national energy companies. Aramco went public. ADNOC is looking to go global, a more international posture. I'm wondering, what do you think are going to be some of the big changes? And in particular, I welcome your views on the increased role in the oil business, not the energy business, but the oil and gas business that the national companies will have to play going forward.
Yes, a number of things will change. First of all, the only companies that will survive the future are companies that are able to produce at the lowest cost possible. Cost will become a major issue because if you don't produce cheap, nobody will buy from you. People will have options. Secondly, efficiency becomes a major element of every operation now. If you are not able to deliver on time and on schedule and on cost, others will leave you behind and you will not catch up. Thirdly, but most importantly for national oil companies, they must look outwards. They must look at a situation where third-party injection of capital becomes the primary line of business because the states can no longer fund some of these businesses. And the combination of these three is such that this industry going forward will become very dynamic, will be petchem concentric, and definitely because as you have seen through the COVID period, people have now learned that you don't have to leave your home to work. That means less consumption in the years to come, particularly of the liquid products. And what will become material now is companies convert the petroleum resources they have and in the oil business into petchem products, because even when you stay at home, you still make use of petchem products and variation of power-related products. So what we see coming, and we'll adjust to that as a company, is to see that this world is changing. The forecast for 20, 30 years is no longer holding, and we have to be more efficient. We have to be more cost prudent. And ultimately, these businesses in the oil and gas will survive only when you do a combination of these.
Do you think we may have seen the peak oil demand is actually behind us rather than in front of us, that we will not get back to 100 million barrel a day demand market? What is your view on that?
I don't think that will be entirely correct because populations are growing. Countries' economies are responding to new situations. You're having larger middle class in many countries and growing and expanding, particularly in sub-Saharan African countries where population growth is very significant. And also in China and India, a lot of relaxation around birth control, such that in the coming years you will see more explosion of population. That means more demand will be created, and that gap, as long as mobility is based on petroleum, also public transportation system don't respond that quickly to the realities that we're seeing around, we can see that there will be clear increase in growth in the coming years. So I don't believe that we're at peak oil. Peak oil will come probably
peak oil demand, not supply.
Yes, I understand. Peak oil, so the demand, supply can get any high. You can take it to 200 if you want.
Exactly.
Yes, obviously, but I mean, peak oil demand is probably still another 20 years high. These are my thoughts.
So on the 100, we obviously a few months ago we were at 101 million barrels of demand, I think was the global number. How quickly, when do you think we can expect to get back to that? When would you think that would recover?
That may be maybe by end of 2021, possibly. Okay. I think we'll go back to 100 million by 2021, by end 2021, for the simple reason that economies will come back, emotions will fade away. Many people who are still staying at home will come out maybe in another year max, and businesses will still realize that you need to get out of your homes to get your work done, and that will clearly take us back to the 100 million barrels per day number by end of 2021.
You mentioned in your earlier comment there about lowest cost producer being, more to the forefront of the market share. I'm wondering your views on that on the larger scale. In March, of course, we saw a sort of free-for-all, if you like, under very duressful circumstances with the COVID crisis kicking in. But one of your former partners, Sir Mark Moody Stewart, who's the chairman of Royal Dutch Shell, former chairman of Royal Dutch Shell, is a strong advocate that the national energy companies will inevitably have to abandon the supply restrictions to support price model and just move to open market share where the lowest cost producer controls and gains the most market share. What is your view on that? Ultimately, you've identified lowest cost as critical. Has it not come to a time now where the idea of controlling supply for higher price is a flawed strategy as demand growth is at best flat?
Yeah, there are two elements in this. One is your ability to produce cheap means it will allow you to, in your environment, to attract investment. So when people know there are factors that will make you not produce cheap, fiscal issues, environmental issues that will prevent you from producing cheap, they will not put capital into your country, and therefore your production will become low, and then you cannot take advantage of the market. So once those restrictions exist, you're sure that your production costs will be very high, and then the market won't wait for you. Now, the other part of it is the market itself. That is isolated from your production cost. The market doesn't care about your production cost. The market is driven by sentiments, demand, and your ability to supply to the market. So if you produce cheap, all it does to you is that you get more margin, you're able to attract more investment, and therefore you're able to invest more in the process. So there's no absolute balance between your ability to produce a cheap oil, your ability to produce cheap oil with the price in the market. But the moment you're able to produce cheap, and then you become more flexible in your dynamics with your customers. You can give discounts to your customers, whatever the market says, you can decide, say, look, I'm ready to give you $10, for instance. Nobody does that. And say, I can give you $2 discount on my price. That way, the market will come back to you, and it goes ahead also to affect the overall larger market, because when people can find cheap products, it will drag down the prices in the overall bigger market. So it's a very complex system, but they speak to each other. But ability for countries and companies to produce cheap oil will surely bring down the value of goods.
So just to finalize where we started, Mr. Kyari, was at the OPEC meeting that just finished, the very strong language and expectation from Saudi Arabia and Russia for all countries to make full commitment to their cuts, 100% commitments to their cuts. Do you think it was appropriate that the language was so strong about compliance, given what strains certain countries are under?
I think some countries were more effective than others in getting to conformity. And I can understand the frustration because they don't understand the local circumstances of other countries. They also don't see the efforts that you make. There's not everything you do that you put on the media or you go out and start speaking about it. So when countries make cuts and they comply and they don't see others doing it, it's very understandable that they can get angry. But after the conversation, it is very obvious that all the participants have made significant efforts to come to conformity, and that will turn out to be the benefit of all. By end of June, maximum July, you will see significant conformity. Probably not 100% by country, but overall, you will see even over conformity across the spectrum. So we're not surprised that those strong statements came out. But it also came at the background of some countries conforming more quickly than the others. And I'm sure by the next review, it will be obvious that those extreme comments may be misplaced.
So you expect to be at full compliance by the end of June?
Yes, maximum mid of July.
Mid of July. And at that point, how many extra barrels will you be needing to catch up? Because I know they expect you to catch up by the end of September. How many barrels a day extra will you need to cut beyond mid-July in order to get to compliance by the end of September?
There'll be 45,000 barrels per day additional.
Additional after mid-July, once you reach 100% compliance.
Absolutely.
Okay. It's been wonderful speaking with you, Mr. Kyari. I want to thank you very much for being on Halftime Talk this week. Very important voice for our Middle East energy market and for our guests, as they'll be very interested to hear an update from Nigeria. I know it's not quite your first anniversary yet, but I probably won't see you when it is, but congratulations on a very successful first year, and may the second year in your continued tenure at the head of the Nigerian National Petroleum Corporation be a very successful one. Thank you very much.
Thank you very much, Sein, for your kind words, and I deeply appreciate it.
Thank you.